So this is 2018 A-level part 2, question number 3. Someone commenced a stationery trading business on 1st of January 2018. All cash transactions of the business are carried out through a bank current account. Someone, while serving as the manager of the business, recruited an employee to assist in carrying out sales and maintaining inventory. The following transactions took place in the business during January 2018. So we have 12 transactions. And also the bank statement for the month of January is given. The bank statement is given. And requirement. Recording the transactions in the accounting equation, assets equals liabilities plus equity. So under equity, we have capital plus retained earnings. So all the capital transactions, the investment of capital, we have to record in the capital column, and the profit we have to record in the retained earnings. Profit means the income and expenses. Number 2, the cash receipt journal. Only the cash receipt journal and the bank reconciliation statement. Right. So let's start with transaction number 1. So we need to draw the format. Okay, transaction number 1. What is transaction number 1? Someone invested 600,000 in cash and brought 108,000 worth of furniture. So he has invested cash. Cash will increase by 600. And the furniture is a PPE, property, plant, and equipment. It will increase the PPE by 180. So total, his capital will increase by 780. Right? So the total cash plus equity is 780. Capital will increase by 780. Number 2. Purchase stationery for 300,000 for cash. So it's a cash purchases. Cash will decrease. We are giving cash 300,000. And stationery is the inventory. So the inventory will increase by 300,000. Number 3, stationery costing 100,000 was sold for 150 on cash. So we are giving stationery worth of 100,000. The inventory will reduce, and we get cash 150,000, and this will increase the profit by 50. This is a profit, right? Cash sales profit, 100,000 worth of inventory sold for 150,000. Transaction number 4. Stationery costing 150 was sold on credit to Gamini for 200,000. So now we are giving 150,000 worth of stationery. So 150,000 worth of stationery sold on credit to 200,000. Then the debtor will increase by 200,000, and this will give a profit of 50,000 to the business. So it will increase the retained earnings, retained profits. Transaction number 5. Purchased stationery for 400,000 on credit from Jayamal PLC. Right. So again, the stationery will increase by 400,000. Stationery will increase by 400,000. On credit means trade payables will increase. Trade payables will increase. 400,000 on credit. So it will increase the trade payables. Transaction number 6. 300,000 was stationery costing. 300,000 was sold on credit to Nimal for 280. Now there is a loss. Cost is 300. So inventory will decrease by 300. It was sold on credit to Nimal for 280. So Nimal is a debtor debtor will increase by 280, and this will make a loss for the business 20. So make a loss for the business of 20. Number 7, receive the full amount due from Garmin. So this is the amount, transaction number 4. This is the amount we have to receive from Garmin, 200,000. So what happens? He is giving us 200,000 cash. So cash will increase by 200, and the trade receivable will decrease by 200,000. So this amount we are receiving. So that's transaction number 7. Receive the full amount due from the Garmin. Next, the stationery costing 150 was sold for 120,000 on cash. Now the stationery will reduce by 150. Cash received 120. So again there is a loss of 30. It's a loss, right? 150,000 worth of stationery, they are selling at 120. So it's a loss. Salaries, Saman and the assistant. So total 75,000 paying salary. So cash will reduce by 75. Cash will reduce by 75. And this is expense. Salary is an expense, then the retained earnings will reduce by 75. So it's salary. Retained earnings will reduce by 75. Number 10. Office expenses incurred for the month was 40,000, of which 30,000 was paid. Now expense is 40. Retained earnings will reduce. This is office expense. Out of this 40,000, only 30,000 was paid. So 30,000 cash will decrease because cash payment is 30. And another 10,000 is payable. That will increase the other payables. Total expense will reduce the retained earnings. Cash is given 30, another 10,000 is payable. Transaction number 11. Receive the full amount due from Nimal after allowing a discount of 10,000. So how much is receivable from Nimal? It's 280,000. This is the amount receivable from Nimal. Transaction number 6. Stationery sold to Nimal, 280. Now we are going to receive this total amount and giving a discount of 10,000. Discount allowed is an expense. So 280, trade receivable will reduce. Trade receivable will reduce 280, and we will get cash only 270 because 10,000 we are giving a discount. It is an expense. Discount allowed. Discount allowed is an expense. Number 12. Settle the amount due to Jayamal PLC. How much is due to Jayamal PLC? Here is the amount. 400,000 we need to pay to Jayamal. So its liability will reduce and the cash will reduce by 400,000. So this is how we record the transactions. The second point, the second question is prepare the cash receipt journal. So this is the format of the cash receipt journal. So what comes under the cash receipt? So let's check. Cash receipt you can find from the cash column. So in the cash column, we have 600, 150, 200, 120, 270. So these transactions will increase the cash. So these are the cash receipts. So let's identify these cash receipts and record them in the cash receipt journal. So date, transaction number 1, 1st of January. 1st of January, description, capital, investment of capital. The amount is 600,000. So it's a other receipt. Other receipt. So we put 600 as capital. Then transaction number 3. It's 7th of January. 7th of January. 6005 is the check number. Transaction number 3. $4450. Check number is 4450. Stationery costing 100,000 is sold for 150,000 on cash. So this is sales. How much we receive? 150. This is cash sales. Cash sales 150,000. Then the next transaction is 7th transaction. It's 15th of January. 15th of January. 6005. Receive the full amount due from Garmin. So Garmin received 200,000. So it's receiving from the debtors 200,000. Then the next transaction, transaction number 8, 18th of January. 18th of January, 2005 is the check number. Stationery costing 150 was sold for 120 on cash. So it's sales. You can see cash sales. Previous one also will cash sales. Right? So how much we received? 120. So it can be taken under sales column. Credit the cash sales column. This is cash sales. Okay. Then finally, there is one more transaction, 11th transaction, which is 29th of January. 29th of January, 3010 is the check number, and receive the full amount due from NIMA. Discount is given 10,000 and 270 cash receipt. So debtors 270. Okay. You can calculate the total amounts for each column. Right. So that's the total receipt. And the third question is bank reconciliation statement. So what is bank reconciliation statement? We compare the cash book in the business with the bank statement prepared by the bank. So let's compare the balances. So this is our cash column, and here we have the bank debit and credit. So 600 it is there in business bank account and the bank statement. 150 which was deposited and realized in the bank. 200 120 all these are deposited to the bank and it has been realized in the bank. But there is one transaction which is deposited but not realized. So we call it unrealized, unrealized check. It's an unrealized check. There is one unrealized check. Then we have to compare the debit side of the bank statement with the payment side of the cash book. So 300, let's take another color. 300 payment, it is there. It is there in bank account and the bank statement. Paid and presented. 75 means the 50 and 25, the two payments for salaries. And 30,000, 30,000. And so there is a small correction. This bank charges is 5,000. Typing error. Okay, so bank charges is 5,000. And this 400,000. 400,000 is not recorded, not entered in the bank statement. So it is a check which is given to the creditor but not presented to the bank. So we call it unpresented check. Unpresented check. Okay. Right. So let's prepare the bank reconciliation statement. So it starts with balance as per the bank statement. Bank statement balance is 660,000. Here. This is the bank statement balance, 660,000. Then we add unrealized. So there is one unrealized check, which is 270. And deduct unpresented checks. There's one unpresented check. So we don't take bank charges to reconciliation. Bank charges will be recorded in the adjusted cash column, adjusted cash book. Okay. So we take the balance. Only two transactions will be affecting this. $270 will be added. 400 will be deducted. So addition 930, 530. If you calculate the cash balance, so let's calculate the cash balance now. Calculate the cash balance. Cash balance is 535. Right? The cash balance in the books is 535. Okay. In the balance as per cash account, you are getting 530. So why you are getting 530 and 535? Why there is a difference? Because in the bank account, in the business, they have not recorded the bank charges of 5,000. So if you draw an adjusted cash account, adjusted bank account, or adjusted cash book, it has a balance, opening balance of 535 and the closing balance is 530. There is a bank charge of 5,000. So you get 530. So that is this amount. Right? So we did the transactions, recording the transactions in the accounting equation, then the cash receipt journal and the bank reconciliation statement.